Hey everyone, welcome back for another deep dive. Let's jump right into it. Today we're looking at some fresh U.S. economic news, hot off the press from yesterday, October 17th, 2024.
Right, we've got two big reports on the docket today.
Yeah, retail sales and jobless claims, always interesting to see what's going on there. So are people spending? Are they working? Let's dig in and find out. First up, retail sales. Now, you might think with all the talk about inflation and interest rate hikes, people would be, I don't know, maybe hesitant to spend.
Yeah, you'd think so, right?
Here's the thing, retail sales actually jumped up.
They did, by a not too shabby 0.4% in September.
Which is a bit of a surprise for some, right?
It is. It was a bit higher than a lot of analysts were predicting.
So what's the deal? Does this mean everyone's just ignoring those interest rate hikes?
Well, not necessarily. The details are pretty interesting. Like, if you look at the report closely, some things jump out. Like, miscellaneous store retailers, for instance, they saw a pretty big jump, something like 4%. Okay, so what does that tell us? Miscellaneous is kind of a broad category, right?
It is. But it could point to people looking for deals, maybe shifting more towards discount stores.
Interesting. Like, maybe we're being a bit more careful with our money overall.
Could be.
Yeah.
It's a bit of a puzzle, really, figuring out exactly what's behind that miscellaneous surge.
Totally. But hey, at least people are still buying clothes, right? Clothing stores were up too, like 1.5%. And even bars and restaurants saw a little bump, about 1%. It's like we're still treating ourselves, even if we're cutting back in other areas.
Absolutely. It makes you wonder what people consider, essential versus, hey, I need a little treat kind of spending.
Mm-hmm.
And speaking of treats, one area that actually saw a decrease was gas station sales. They were down 1.6%.
Yeah, it makes sense with gas prices dropping, right? Like, hey, I saved a few bucks on gas this week. Maybe I can finally get that new whatever they've been wanting.
Exactly. People are savvy. They adjust their spending based on what's happening around them.
Right. But hold on a second. We got to talk about inflation. Because even if we're spending more, if prices are going up even faster, are we really getting ahead?
You got it. That's the key question. And it's something that often gets overlooked when people just focus on the raw retail sales numbers. Those numbers are adjusted for seasonal variations, like the usual holiday shopping sprees and whatnot.
Right.
But are not adjusted for inflation, which was still at 0.2% that month.
So what does that mean? Like, are we tricking ourselves into thinking the economy is doing better than it actually is?
Well, it's not quite that simple, but it does mean we have to be careful about drawing conclusions based on just one set of numbers. Like, are wages keeping pace with inflation? Are people dipping into their savings to maintain their lifestyle? These are all important questions that go beyond just, how much stuff we're buying.
Okay, so it's complicated. More to it than meets the eye.
Exactly. And speaking of complicated, let's move on to the job market.
All right, so jobs, right. The other half of the equation. And the latest jobless claims report, kind of interesting what we're seeing there. Initial claims dropped to 241,000.
Yeah, a bit lower than expected, for sure.
So at first glance, it's like, hey, the job market's looking all right. But then I got to think about those hurricanes we just had. Helene and Milton, those were no joke. Surely those must have had some kind of impact on jobs, at least in the short term.
You would think so, right? I mean, natural disasters, they usually lead to a spike in jobless claims. Businesses have to close temporarily. People are out of work.
Exactly.
And, we did see that initial jump in claims right after the hurricanes hit, especially in the areas that were hit the hardest.
Yeah.
But the week after, get this, claims in Florida, South Carolina, they actually went down.
Wow, so people were able to get back to work pretty quickly then.
Seems that way, yeah, which is definitely a good sign, right? Shows some resilience.
It does. But how do we fit this into everything else that's going on? I mean, the Fed's raising interest rates, trying to, cool things down. Does this change anything for them?
Well, that's the big question, isn't it? The Fed's been watching the job market very closely. Because a strong job market, it can actually make inflation worse.
How so?
Well, when there's a lot of competition for workers, companies have to offer higher wages to attract people.
Right.
And then they pass those costs on to consumers through higher prices. It's a bit of a vicious cycle.
So it's like the Fed's trying to walk this tightrope between, I don't know, keeping the economy going, but also not letting inflation get out of control.
Exactly. And this jobless claims report, it just adds another layer of complexity. Like, on the one hand, it could mean that the job market is stronger than we thought, able to bounce back from these big shocks.
Right.
But it could also mean that the Fed's efforts to slow things down, they haven't fully kicked in yet. We might not be seeing the full effects for a while.
So how do we make sense of all of this? What does it actually tell us about the U.S. economy right now? So it's like we're trying to read the tea leaves here, right? We've got strong consumer spending, which is usually a good thing.
Right.
But then we've also got this tight job market that could, push inflation even higher. It's a bit of a head scratcher. So what's the bottom line for, the average person trying to make sense of all this?
Well, the Fed, they're hoping for what they call a soft landing. Basically trying to cool the economy down just enough to get inflation under control without causing a full-blown recession.
Soft landing. I like the sound of that. But what does that actually look like, in real life?
Well, in a perfect world, inflation would gradually come down to a more comfortable level,
Okay.
say around 2%, without any major disruptions to economic growth or employment. So people would still have jobs, but things would stop getting more expensive so quickly.
Right. Makes sense. But let's be real. How likely is that soft landing scenario? I mean, there's a lot going on right now, globally and here at home. Seems like it would be pretty easy to, accidentally hit the brakes too hard.
It's definitely a challenge, no doubt about it. And there are a lot of external factors that could throw things off course. Like we still got the war in Ukraine, which is causing uncertainty in energy markets. And then there are those ongoing supply chain issues. Yeah, those are still putting upward pressure on prices.
So many moving parts. It's a lot to keep track of.
It really is. And that's why it's so important to stay informed. Really try to understand the nuances of what's happening.
Yeah.
Don't just go by the headlines.
Exactly. So as we wrap things up here, what's the one big takeaway you want our listeners to remember? What's the thing they should keep in mind as they, make their own financial plans and decisions?
I think the most important thing to remember is that the economy is not this simple, straightforward thing. There's no magic formula. It's about looking at all the different pieces of the puzzle. Interest rates, inflation, jobs, global events, and understand how they all fit together.
It's about connecting the dots.
Exactly.
Awesome. Well, on that note, we're going to have to wrap up this deep dive. But hey, keep those brains buzzing, keep asking those questions, and we'll catch you next time for another deep dive into, well, whatever's happening in the world.